Hello and welcome to the Reason live stream. I'm Zach Weissmueller. Today we're going to be talking with Balaji Srinivasan, a venture capitalist and former CTO at Coinbase and author of The Network State, about his $1 million public bet on March 17th that one Bitcoin will be worth $1 million in 90 days. Today's Bitcoin price was about $28,400 when I checked this morning. Balaji is still on his way to join us. He'll be joining us from Singapore, so he's running a few minutes behind. It's very late there, so understandable. But when he joins, he's going to explain to us why he made that bet, what his fundamental concerns are about the state of America's banking system and the US dollar, and why he thinks Bitcoin is on the brink of massive worldwide adoption. Also joining us to offer his insights is Lawrence H. White, an economist at George Mason University, specializing in banking and monetary policy, and author of the recently released book, Better Money, Gold, Fiat, or Bitcoin. Larry, thank you very much for joining me for today's conversation.
Thanks, Zach. Thanks for inviting me.
So let's start. Oh, wait, I see Balaji has jumped in. Let me add him to the stream. Oh, there he is. Okay. Balaji, thanks for joining us.
Hey, thanks, guys. Just the link just kept crashing my browser. I had to get to a different computer. Hopefully,
gotcha.
Can you hear me all right?
I can hear you, yes.
Great.
Yep. Well, yeah, thanks for joining us. And, since you're here, let's start with you. I want to start with just understanding the bet, Balaji, and let me pull up a couple slides here. So this is how it all went down. There's a pseudonymous Twitter poster named calls himself James Medlock, describes himself as a tax enthusiast and hyperinflation doubter, and says, I'll bet anyone $1 million that the US does not enter hyperinflation. That, of course, being a sort of joke in itself, in that if we had hyperinflation, the $1 million wouldn't be worth so much. But Balaji, you jumped in and said, I will take that bet. You buy one Bitcoin, I will send $1 million. That's about 40 to 1 odds, as Bitcoin is worth about $26,000.
Let me cut you off here. If you go down one tweet,
yeah.
See if you can pull that up. The one.
Yeah, I'm gonna have to pull up your Twitter here in a second, but because this is just a screenshot. But if you want to describe what happened, and I'll look for it.
Sure. So basically, the fuller context here is, in a sense, this is a bet that I've already won and a bet that I've already lost. Right? Why? Okay. So the point was to bring attention to the stealth financial crisis that at the time that I tweeted this, that had not been acknowledged as such. People were treating it as an isolated bank failure. They were trying to say that the Fed had nothing to do with it. They were trying to say that, oh, of course, everybody knows how to hedge duration risk, and it was just, one dumb bank manager. People were not talking about the fact that the crypto exits were being closed, with crypto banks getting shut down and crypto companies getting assaulted. People were not talking about the fact that Fed is launching Fed Now in July. People are not talking about the sheer quantity of money that is being printed or that could be printed under both this BTFP program and the new swap lines program. They weren't talking about the fact that hundreds of billions of dollars has been sent out of local regional banks. And they were basically blaming it on you, the depositor, not diligencing your bank and finding out that the bank was often insolvent and that the central bank had paused insolvency and the bank regulators had not disclosed it. And so the point of this was essentially to alert people to that kind of combination of facts. And one way of thinking about it is timing is hard, but prepping is easy. And from back during COVID, the early days of COVID, when I saw this thing coming out of China, from my first tweet to actually California being under lockdown was actually 42 days. From Silicon Valley Bank going from totally functional bank to having 42 billion wired out of it, and then another 100-something billion, if reports are to be clear, was about like 2 days or 3 days. We have something where if you look at a bunch of these bank stocks, they're like analog and then it's digital death at the end, right? Meaning that insofar as markets were reflecting information about the future, they actually weren't, because the death at the end was just digital. They just kind of went to zero, whether it's SVB or like First Republic. These things just look digital at the end. The death is digital. If you go and look at the discount window and you look at, the money that banks are taking from the Fed, that's also like vertical and it's past 2008, and on and on and on. Point is, there's quite a few measures right now that show that the economy is in cardiac arrest of some form or the other, or entering it, and a lot of these things are just kind of going vertical at the same time. And all of that was being obscured because like Biden was meeting with like Ted Lasso, staff of Ted Lasso. Do you see that? Right.
Right. Yes.
And so how do you punch through that? Right. How do you go, like, you have CNN, you have Wall Street Journal, and like the Wall Street Journal is reporting on this somewhat, but they're reporting it on as a blow by blow basis, like this bank is going down and this thing has a problem, as opposed to an overall narrative that puts the facts together in a different way, which says the Fed actually killed the banks. And that's actually the upstream hand, like engineist and firefighter, right? And that gives a model of what to expect. So point basically being, how do you punch through that cycle? And I actually, a few days earlier, had up a different thing where I was just basically paying people like $1,000 to post about, like graphs and charts on this stealth financial crisis. And then mocking that, Medlock came and he was like, oh, and the US will never enter hyperinflation. And so then I was like, okay, fine. Why don't we take this little bet? Because I had already set out to essentially burn money as a public service to alert people to this self-financial crisis. Does that make sense? Right. And if you go and look at my subsequent tweet, can you bring that up? Like the reply to that first one?
Yeah.
Where it says, just as in 2008, the bankers lied.
Hold on. Okay. Just in 2008, the bankers lied. Okay. Yeah. Let me screen share that 1 second. Where's my present share screen?
By the Lawrence Facebook.
Hi.
Okay. Here we go. So
there we go.
Down, right. Just as in 2008, the bankers lied.
Right, exactly. So this was the post that I wanted people to see. Okay, it's a reply to the bet post, and essentially lays out a completely different narrative than what you'd read in the press, where insofar as if you're to believe Twitter before this, some immigrant engineer in Sunnyvale is responsible for finding a hidden insolvency in a footnote of a bank 10Q, but Jerome Powell is responsible for nothing. Right? That was literally what the narrative was. And I knew hundreds of like Indian founders, other founders who are like, I don't trust US banks, and moving their money back home, just getting their money the heck out, not knowing what the hell was happening, just knowing they were getting blamed for the bank losing their money. And pulling it all together, essentially, just as in 2008, the bankers lied. This time, the central bankers, the banks, and the bank regulators have lied to all dollar holders and depositors, not your typical fractional reserve situation. There isn't enough in the banks on a mark-to-market basis to cover withdrawals. They knew this all through last year and communicated internally in their coded language. I give a bunch of citations. The keyword is unrealized losses, citations to the Fed, citations to FDIC, citations to banks themselves, citations to the bank's accountants, showing them how to hide the insolvency, and comparing it, if you scroll up a little bit, like, Uncle Sam Bankman-Fried. Okay, so just like Sam Bankman-Fried used your deposits at FTX to go and buy, these crappy assets, shitcoins, and use accounting tricks. He had this crazy balance sheet. Remember that?
Yeah.
He used accounting tricks to fool himself and others into thinking that he still had the money. But when people came for the money, he wasn't there. Very similar thing happened with the banks themselves. They used people's deposits to buy long-dated U.S. treasuries, the ultimate shitcoin in a sense. They all got destroyed at the same time, the same way, because they bought the same asset and the same vendor who devalued it at the same time, which is the Fed. And it's really just like the failure of central planning. It's just in a totally different way than communism or whatever. It's just another just central planning, complete faceplant where they all make the same mistake at the same time because all the innovation or contrariness or whatever is being leached out of the system. So I give some of the TikTok there. If you go to that citation number 8 in 2021, yeah. So click that, open a new window. This shows, and this is getting, by the way, you have to know technical bond or bank stuff or whatever to understand what the heck is going on here. But if you zoom out a little bit here, this headline says in August 2021, banks are binging on bonds, but not because they want to, right? So essentially what happened was all that printed money, it crowded out the normal supply of commercial loans, interest rates were depressed. Only way for banks to make money was to buy long-term government bonds, the only thing that gave any interest. So they all loaded up on them at the same time. Powell and everybody is saying inflation's a conspiracy theory. You're such a loser for saying we're ever going to have inflation. Interest rates are going to be low for a long time. We're going to be patient about rate hikes. In fact, if you go back to my tweet, okay, and you go to, actually, if you go to the next tweet, because they only let me put 10 links in a tweet, go into that one. Yeah, just click that, the show more there, click that. Scroll down a little bit to the references. Keep going a little bit more. Yeah, okay, click link number 9, link number 9. Even as late as November 3rd, 2021, Powell is saying that he's going to be patient on rate hikes. Okay, so he's baiting everybody in to buy gigantic amounts of bonds at saying that rate hikes are going to be slow and gradual and so on. And then what happens is, if you go back, a couple more tabs, November 22nd, 2021, he gets renominated. Okay, and then he just hikes rates to the absolute moon, thinking now probably that, my surmise is that he thought, okay, now I can be Paul Volcker. I'm safe. I'm renominated. I can be aggressive, et cetera. Because presidents don't want Fed chairs to hike rates going into an election year. Okay. Mm-hmm. So probably for political reasons, the rate hike was deferred. Sort of like Xi Jinping is only letting people out of lockdown after, after he got whatever you call it, reelected, or now he's supreme leader for life, whatever term you would use for that, right? The Chinese Congress that happened recently. He went easier on lockdown. He felt he could make a policy change once he was secure. In the same way, I think that's probably what happened is now Powell's running this 80s rerun of, okay, I'll hike rates to the moon, but he's starting from something near zero as opposed to near 4%, and an economy that is being, stimulated to within an inch of its life for the last 10 years. And everybody was not positioned correctly for this. They all had these gigantic long-term bonds. They were all faked out. They didn't have time to adapt. Rates get hiked to the moon. And then what happens, if you go back a little bit earlier, is up further. So previous tweet.
Okay. Here?
Yeah, so just click that one, just drill into the links. Sorry, I'll do it myself. Go down.
No worries.
Yeah. So basically, click, for example, link 5, bank CPAs. Yeah. So essentially, all the banks realize that they're dead in April 2022. So you see that, rising rates and considerations. If you scroll down, do you see what it's highlighted? A little bit more, down. Yeah, there. Anxious bankers wondering what they should do in reaction to large losses. So as early 2022, all the bankers realized that they had just gotten wrecked by the Fed. Okay, gigantic losses. The Fed was surprised, and all of them just got destroyed because they had all trusted the Fed and bought huge amounts of bonds at low rates before the Fed, the next year, just hiked it to the moon and destroyed all of these portfolios in the same way at the same time. Okay, so what do the bankers do in reaction to large losses? They hid them. Hold to maturity, I call it hide to maturity. They hid them to shield their portfolio and related book capital from. So basically, they wanted to, the regulators abetted this. Okay, and you can read this. It's written in accountingese. Okay, but essentially, it's what do you do with these gigantic losses? Well, you can sweep them under the rug. Okay, so this shows, again, you followed this trail of references. It shows that the central bank, the banks, and the bank regulators have essentially covered up the Fed caused insolvency of hundreds of banks. And when I say hundreds, by the way, just go back one more time.
Yep. back to your tweets.
Yeah, back to the tweets. Yep, and click number 4. All right. So first of all, that's unrealized losses. Actually, sorry, go back one. Sorry,
Yep.
to the tweets. Click number 1 then. Actually, September 2022. This shows that, you know, Kansas City Fed has this report, okay, which says first that rising interest rates led to the, so they accept responsibility in a sense that the interest rate environment has led to, you know, unrealized loss positions because, you know, rising rates make the old bonds less valuable. And if you scroll down at the very bottom, yeah, wait, sorry, you see that? Okay, at year-end 2021, only 4 community banks had tangible equity capital ratios below 5%. That number increased to 333 by June 30th. Less ability to sustain economic shocks. In other words, the Fed increased the number of dead banks by 75x in 6 months. And the Fed knew that and didn't notify depositors. They're all dead. All the banks are dead, or like what? Some very large fraction of them, right? Stanford's done a study. You can Google Stanford study of like 4,800 banks. Google like do a new tab if you want. Do Stanford 4,800 banks.
Okay.
Stanford 4,800 banks. SEB. Stanford with an N.
Stanford 4,800 banks.
4,800
So
banks.
do you mean the paper by Zhang, Matt Vos, Pikorsky, and Seru?
Yeah, I think that's the one. Yeah, that's right. Yeah, that's that first one. That first one, right?
Oh yeah.
So they
Okay.
went through a bunch of 10Qs. You know, maybe you've read it already, Lawrence. So
Yeah.
2.2 trillion losses, right? And point is, SVB was being presented at the time that I put out that tweet. Okay, SVB was presented as something that risky tech gamblers brought upon themselves. That it was like VC bets. It's your fault that, you know, like your account was going to zero. That it was some bailout or something like that, right? What actually happened was the Fed killed not just SVB, but lots of other banks. The bank regulators who you paid didn't do their job, didn't tell you, the depositor, that the banks were bust. It's you know, you paid for all the regulation, you got none of the protection. And the banks themselves certainly, you know, you go to these websites and what do they have? I know it's the EU, but the EU tells you, hey, there's cookies on the website, click, right? That's in your face that the bank has cookies on their website. You know what's on your face? Where the bank is insolvent. Okay, so it's like San Francisco. San Francisco, you pay for the police, you get you pay for the police, and you get none of the protection.
Okay.
Right? You have to, anyway, let me pause there. So point is, all I'm saying is this narrative. Now, of course, they've now moved the ball forward a little bit since the last time I spoke, which is, yes, now they've realized that everybody knows that many banks are bust. Which banks are bust, we don't know until you actually have a bank run, because, you know, these are 10Qs. It's like quarterly. I don't know what their real-time, you know, numbers are. And some of them have bond losses. Some of them have loss in their loan book, other things. Who knows which banks are actually dead or not? It's like Schrodinger's bank, right? It's a cat dead or alive, right? So what they've done now is they've done this gigantic, essentially money printing thing, this BTFP program, where it was supposed to be $25 billion and not be used. Now it's already past whatever $100 billion. And, you know, JPMC estimates $2 trillion already. Arthur Hayes thinks it's $4 trillion. And so all that money is there. And in theory, it's loans as opposed to purchases, but probably they'll roll over the loans. All the money is there now to bail out the banks behind when people are wiring money out from dead banks. Well, the Fed is backstopping them, right? So they're making it less likely that the banks die in a fire, though some of them still will, because they won't take the BTFP loans. They'll just try and risk a bank run. But they have caused a giant cloud of money to now arise, and some of it is going to money market funds, and some of it is going to big banks. But essentially, we've turned traditional finance into like a giant floating cloud of digital money that is seeking the highest return and highest safety. And that is just completely destabilized the banking system. They don't understand what that is. It's actually very similar to the DeFi world, where DeFi, all this money seeking yield constantly. And eventually, I think some of that money is going to seek the exit to Bitcoin. And that's a hyper-Bitcoinization thesis. But let me pause here. That gives you like the method of the madness, so to speak.
Yes, Thank you for that overview, and I want to get Larry in here in just a second to react to all of that you just laid out. But first, I just do want to ask a follow-up about the bet itself. First of all, following both you and James Medlock on Twitter, it looks like you've moved the money into escrow and are working out legal details. Is that kind of the status of things right now in terms of the actual bet?
I have the money. I posted it in an Ethereum address. We are working out legal details. One of the things that happened is this guy, Matt Levine, made various allegations which are untrue in an article, like, oh, it's, market manipulation, blah, blah, blah. It's completely untrue. I'm not selling any Bitcoin. I'm holding Bitcoin until the US dollar is no longer the reserve currency.
Because the allegation would be that you own a lot of Bitcoin, so you're trying to pump up the price to make more than the $1 or $2 million that you've bet.
Yeah, exactly. That's his allegation, which is false. Right. And I've rebutted it publicly. First, obviously, I've disclosed I've had Bitcoin forever. But second is, I didn't actually even propose this bet. I accepted it, right? It was somebody else who proposed it and so on. Like, they were poking at me. Mm-hmm. Third is that this is like a Simon Ehrlich style bet. It's like an ideological bet. I can't actually make money on it. It was meant to prove a point about this financial crisis. And you can see my state of mind if you go and look at the tweets since like March 11th. Like, essentially what I'm doing is piecing together this narrative that I just kind of described. I was trying to figure out what the heck I was looking at. I realized the banks were dead.
Okay, so you're saying it's a Julian Simon, Paul Ehrlich style bet, who famously made a bet trying to see, Ehrlich was predicting that we're going to be overpopulated and commodity prices are going to go crazy. Julian Simon said, no, let's bet on this basket of commodities. And Simon famously won that bet. So he actually believed that this was not going to happen, and he won the bet. I guess that's the one question I want to get to you before we have Larry weigh in here is, like, do you actually believe Bitcoin's going to $1 million, or is it really just to draw? Is it like drawing attention to this problem that you've laid out?
I think Bitcoin will eventually go to $1 million. I do think there's some like Arthur Hayes also thinks it's going to $1 million. Like, basically, I think we're now in the final stages of fiat, in a sense. Like, they've realized that they cannot. They tried this rate hiking thing, they buckled. They're now printing again. So we're already in a base of high inflation. And unlike 2008, the US dollar is no longer too big to fail. Like, it has two scale competitors in the form of BTC and RMB. And God help us if RMB, if they open the capital account in China's new reserve currency, then we're all under some horrible surveillance state. Even the dollar itself is being turned into something pretty terrible, I think, with this Fed now thing, which is not technically a CBDC, but it's got many of the negative aspects of CBDC for civil liberties. So, the thing is, timing is hard, prepping is easy. Okay. So I don't know exactly when this is going to happen, but I wanted to draw attention to the combination of lots of small banks being destroyed with money being centralized in big banks or money market funds. B, the crypto exits being closed. C, an enormous amount of printing beginning again. And then D, amidst all of this, in July, pushing up the timetable evidently for the Fed Now launch, which would make it easy to impose capital controls and lock you in to a system of potentially devalued dollars, right? Now, be clear, by the way, do I think all of that is like intentional and so on? No, I mean, like, if you think about, for example, camouflage, you can have a soldier who camouflages themselves and they put like, the stuff on their face and they've got the sniper rifle. Or you could have a snake which has evolved camouflage and it was never intentional. It just kind of happened, right? And I think this system is more the latter, where it's like emergent and evolved, where anything that's obvious is kind of caught out. So the whole thing evolved for people to lie to themselves and lie to you about what they're actually doing, not fully understanding what it is, but what it is like basically trying to essentially do a stealth devaluation of the dollar. Like, what Dalio predicted is actually now happening, that they're monetizing the debt. They're now in the early stages of that. How fast it happens, I don't know, but it's much better to be aware of that and then execute on whatever digital prep measures, the digital prepper before, and then, see if that happens. Again, whether that's 90 days, whether it's 900 days, TBD, but I do think we're in the last stage of the field. Like, the beginning.
Larry, I think Balaji's laid it out pretty thoroughly there. And Balaji, I don't know if you're wearing a mic on your lapel or something, but we are getting a lot of interference. I don't know if there's any adjustments you can do there. Let me play a clip from Fed Chair Jerome Powell, expressing a contrary opinion about the state of the banking system. And then, Larry, I'd like you to weigh in and tell me, do you side more with Balaji? Do you side more with Powell? Or do you have a totally different take on all this?
System is sound and resilient with strong. Our banking system is sound and resilient with strong capital and liquidity. We will continue to closely monitor conditions in the banking system and are prepared to use all of our tools as needed to keep it safe and sound.
What do you think, Larry?
No, I think I'm on Balaji's side when it comes to the soundness of the banking system or lack of soundness of the U.S. banking system. And I think he's doing a real service by drawing attention to what's been going on. Now, I don't follow that hyperinflation is going to be the result of it. But yeah, the banking system's in very deep trouble, and it's because of central bank policy. And even if the Fed hadn't tightened monetary policy, there would have been a problem because the loose monetary policy that the Fed ran during the pandemic and then didn't withdraw when the need for that much liquidity had vanished, gave us the 8.9% inflation that we had last year. And that's driven up long-term interest rates, and the long-term rise in long-term interest rates is what makes the value of long-term bonds crater. So the Fed is in a hard place where they're trying to fight inflationary expectations and in that way bring down long-term interest rates. But that requires them to tighten money and with the side effect of raising short-term interest rates. And so that also can contribute to raising the whole term structure of interest rates. But we have a banking system where, as Balaji said, banks, many banks bought long-term bonds because that seemed to be the only way to earn any yield. And the regulators encouraged them to do it under the premise that treasuries are a safe security. Well, they're not going to default. They're safe in that sense, but they do have a lot of interest rate risk when you buy a 20-year treasury bond. So when interest rates go up, the value of those bonds goes down. And that's a problem they should have been aware of, and that the banks should have been aware of, and that the regulators should have been aware of. One of the scandals is that when they did stress tests last year of the largest banks, they simulated what would happen to their net worth if interest rates rose from 0 to 2%. And that's as high as they went. And at 2%, SVB would have been okay. If they had, tested for 3%, 4%, where are we now? 4.75% interest rates, they would have seen a lot more trouble than the regulators wanted to see. So there has been a failure to look deeply enough, and as Balaji said, they haven't been very public about the problems that are at the banks. And the study he cited by the working paper by 4 economists, the title of which is Monetary Tightening and U.S. Bank Fragility in 2023, shows that it's not just bonds that have fallen in value, it's also mortgages and other long-term loans at fixed rates that banks have made. And these authors estimate that assets have declined by 10% across all banks. And most banks have less than 10% capital, so that's pretty serious. And at the worst banks, it's a bigger decline. So their estimate is that something like 190 banks are at a risk of insolvency to the point where just wiping out the uninsured depositors isn't going to be enough. There are going to be losses to the FDIC if they need to pay back insured depositors. So that's a problem. And in the last week, we've seen the injection of funds by the Fed in the form of loans to the banks. And I looked at the Fed's balance sheet, and total Fed credit was up 211 billion last week. So it is hundreds of billions. It's not yet trillions. It's not yet rivaling the size of the QE programs in recent years. But if they added 200 billion every week for a while, it adds up. Now, hopefully they won't need to add that much. But even if they do need to lend that much to banks, it doesn't follow that we get expansion in the monetary base or the total Fed liabilities or in money held by the public, because the Fed can sterilize the loans they make to banks. That is, they can offset their effect on monetary aggregates by selling other assets, selling securities out of the Fed's portfolio. And the Fed has trillions of dollars worth of securities. And in that way, they can keep total Fed credit unchanged. That's what they did in 2008. They didn't keep total Fed credit from rising. The monetary base rose quite dramatically. They kept money held by the public from rising, and they sterilized those expansions by paying interest on reserves, in a sense, paying banks not to create more deposits. So they can do that again. They can pay a little more on reserves. Now that, in a sense, kicks the can down the road. The Fed itself is already insolvent. It's worth mentioning. The Fed itself has a very long bond portfolio, and it's lost enough money to wipe out its capital. But that doesn't stop them. In a fiat money system, nobody can redeem their liabilities, so they can keep on printing, they can keep employees, and they can keep on lending to banks. But they don't need to engage in a hyper expansion in order to lend more to banks. And even if they lend more to banks and don't neutralize the effect on the monetary base, they can neutralize the effect on money held by the public. So it depends on whether the Fed will take those steps. And if they're at all serious about keeping inflation contained, they will have to take those steps. Now, that we've seen in other countries the kind of problem where central banks issue a blanket guarantee that they're going to print enough money to save all the banks. The Philippines did that in 1997, and the result was inflation and a sharp devaluation of the Philippine currency. But in the US, we bailed out the savings and loan industry without that causing an inflation. In fact, that happened in a period of falling inflation. So I'm skeptical of the prediction of hyperinflation in the US, and correspondingly, I'm skeptical of hyperbitcoinization as a result.
Let's talk first about hyperinflation. What do you say to that skepticism, Balaji?
So the thing is that actually, I'm trying to find this paper. I mean, there's a difference between hyperinflation and hyperbitcoinization. Those are actually distinct. And it's actually possible, for example, to have something like, what happened to Argentina, where you had both a massive economic contraction and the dollar tripled in value, like relative to, so people were trying to, the economy was contracting and people were trying to exit it at the same time for a stronger form, right? That is what, like, quote, hyper Bitcoinization looks like, where, you could potentially even have some prices fall, or you could have weird things happening where, like, I don't know, housing prices fall and food prices rise, or things are all just haywire because they've broken some of the normal relationships where they're still hiking rates, but they're then bailing out the banks while they're hiking rates. So the normal relationship between high rates and tight monetary is being broken. So just like stagflation is in like a region of the graph where you think that, inflation and unemployment are traded off, but maybe they could happen at the same time. I don't know whether typical economic relationships will hold. So I don't have a strong thesis on all the internal dynamics of the US or more generally Western economies. I do think that more and more people will want to exit them. And that's what hyper-Bitcoinization means, really, or more generally, it means USD BTC is the one number that is really hard for the Fed to fake, because you can't manipulate, it can't freeze or seize or inflate Bitcoin. That simple constraint of the fixed 21 million with the infinity of the Fed, Bitcoin exists outside the Fed's video game. Okay, like you think about the Fed as like the system administrator of all the banks, and actually indirectly, through the other central banks, all the banks under, like the Bank of Japan, and so all of these other, central banks that sort of fold into the Fed, where it did these announcements of joint central banks, or joint announcements with other central banks. The Fed can it doesn't have a full CBDC yet, of course, but it can order any account frozen. It can print money. It can do all these things because all these banks are effectively licensed by it directly or indirectly. So it can make all the numbers go up within this video game. It can't, however, create like loaves of bread outside. It can't affect China's RMB. That's its own video game. And it cannot affect the number of BTC, right? Those are separate systems, right? Those are genuinely sovereign. In a sense, the three true currency pairs in the world arguably are like USD, RMB, RMB BTC, and BTC USD, right? Those are like the three truly independent billion person-ish economic systems. And so the Bitcoinization thesis or the hyper-Bitcoinization is that as the US economy just gets worse and worse and more unpredictable, people will seek a safe haven, not in money market funds and big banks, which are, in my view, a trap in this cycle in a way that they were not in 2008. Are they a trap? Because I think you will probably have some form of either capital control or a FedNow like set of controls and so on imposed on them. You may not be able to wire money out. You may have various kinds of things that make it difficult for you to buy cryptocurrency from there. It may be like it was a Hotel California or something, like you go in and you don't come out or something, right?
You can never leave. Yes.
You can never leave. That's right. And by the capital controls thing, someone's like, oh yeah, Balaji, well, tell me when the capital controls come. I'm like, do you take a look at this Restrict Act? Like that's even more intense than that's just any transaction. Like forget if they're willing to throw you in jail, 20 years in prison and $250,000 fine for using a VPN to access TikTok. Yeah, absolutely. That will include capital controls. Like if they really want to do that, right? Like clearly that's far in excess of just a normal capital control. So that is the thesis: is you could have a contraction, and you could have people who want to escape the economy into something that is like a gold, or in this case, a digital gold. Now, by the way, it doesn't have to be Bitcoin. You could go to oil, or you could go to commodities, or you could go to hard goods of some kind. You could go to another foreign banking system. Some, Indians have moved their money to India. I never thought I'd see the day when Indian banks were considered more trustworthy than American banks, but here we are. And they are by many Indian founders, right?
And so you can go to gold, which many Indians do. Yes,
that's right. You can go to gold, and I know you've written books on gold, Lawrence. And I'm always pro gold. I think gold is eternal and it's got a lot of good properties. It's hard to transport. Metal detectors will set it off. It's pretty heavy. It's illiquid. There are downsides, as you know, but gold is also reasonable. It will hold its value. Okay. But basically that's the thesis. Is I don't have a strong thesis on the internal mechanics of, like the wings on a plane are in a certain way when a plane is flying, but when a plane is crashing, the wings can be all akimbo, right? So I don't have a strong thesis on what's going to happen in this unprecedented time of continuing to hike rates while they're printing trillions and breaking normal relationships. I don't have a strong, opinion of that. Just that things are going to break in bizarre ways. By the way, we still have this whole opaque derivatives thing out there where who the heck knows what's going to happen to that. We have massive commercial real estate crashes this year where all these leases aren't getting renewed. I've heard some stuff about like insurance. There's a debt ceiling thing coming up in June. A lot of different things are going to probably blow up. So I don't know exactly how it's going to blow up. I just think that people are going to want to just stay clear. And I think that's the thesis on getting into Bitcoin.
Yeah,
I think it's reasonable to expect people to move some of their savings into Bitcoin in order to diversify away from the dollar when inflation in the dollar goes up and becomes less predictable. But hey, we had 9% inflation last year at the peak. We had 10% inflation in Europe and Great Britain, and we don't see people adopting Bitcoin as a medium of exchange in those countries. So when people talk about hyper-Bitcoinization, I understand them to be talking about the adoption of Bitcoin as an everyday money, as a medium of exchange. I've studied what makes countries switch from their domestic currency to a new currency. For example, when Latin American countries dollarize, and it takes fairly high inflation, more than 10%, I would say, more like 20% and rising with no correction in sight. And until we see that, I don't expect to see major movement out of dollars into alternatives. And one of the alternatives is gold. Gold actually has a larger installed base than Bitcoin right now. The monetary type gold, that is just coins and bullion and ETFs in the hands of the public, is like $4.5 trillion. So that's 9 times the value of Bitcoin at the moment. Now, it's not easily spendable as Bitcoin is, but people are digitizing gold and making it transferable online. And so that may become an alternative if the dollar really becomes unstable. But I place pretty low odds on our getting 20% inflation in the US anytime soon.
Well, so let me show you just this. Here's just an interesting graph. Can I put this graph on screen, the share screen? Yeah.
Sure.
This just, this is actually from 7 days ago, but I think it's continued. That's an interesting chart where banks are crashing and Bitcoin is soaring, because it is for the first time showing something that we have theorized, that enough people now understand that it's got. I'm not saying there aren't any failure modes with Bitcoin. For example, you can lose your private keys; it can be stolen, and so on and so forth, right? But it's an orthogonal set of failure modes from losing it at the bank, right? So it's a diversification in that sense.
So these are bank share prices, right?
Bank share prices, that's right.
Yeah, so these are 3 worst case scenarios, yeah.
No, I know. So, like
lots of banks, especially mid-sized banks, have seen their share prices fall pretty far in the last couple of years.
That's right. So the reason, it's just an interesting way of looking at it, that you're starting to see Bitcoin banks like pull away, right? In the sense that Bitcoin was quoted originally as being an alternative to the banks, and now in a literal sense it is, right? To your points, one thing I've said on Twitter, many times is I'm not a Bitcoin maximalist. But I do think we are all Bitcoin maximalists now, in the sense of having focus on one asset as a lifeboat to get out is important. After which there can be many of the theological disputes, tribal disputes that are common in crypto. And what I think is, actually, you can imagine, just to take a sci-fi scenario for a second, that you've seen some stuff where, for example, Florida's come out against the CBDC, for example, Florida.
Yeah.
Yes.
Let me play. Actually, I have a clip of DeSantis talking about that. So let me play that,
Okay.
and then you can talk a little bit about DeSantis in Florida and
get into
CBDCs.
society to any way they can get into society to exercise their agenda, they will do it. So what the central bank digital currency is all about is surveilling Americans and controlling behavior of Americans. Today, I'm here to call on the legislature to pass legislation to expressly forbid the use of CBDC as money within Florida's Uniform Commercial Code. This will ensure that Florida continues to be a state that supports innovation in the financial sector through the market, while protecting against government surveillance over your personal finances.
Could you just explain, let's not assume everyone knows what a CBDC is, so just briefly explain what that is, why you think it's a problem, and why you're approving of what DeSantis is doing here.
Well, so what's a CBDC? A CBDC stands for central bank digital currency, and to first order, it is something that's a lot like Bitcoin or Ethereum, but it is run by a central bank. And so every dollar can be tracked in the ecosystem. It's more programmable. And that's different than how the current banking system is set up, where, without getting too technical, it's more opaque. It's all spread out across different databases, as opposed to like one consolidated database where you can track literally every single dollar moving everywhere, right? Mm-hmm. So from a technology standpoint, a CBDC is an efficiency and transparency and programmability improvement over, the status quo. If you were living in a high trust society, you might be able to do that, right? The problem is, we're not in a high trust society, unfortunately. We're in a society where these genuine productivity gains, unfortunately, will come with a hook. It's like a sweet, where it's got a hook in the bait, and the hook is total surveillance, total control. Ability to freeze accounts, drain accounts. It's the euphemism of consumer to government payments, And I actually have a thing on this here. Maybe you can put this up. The CBDC Lite of FedNow is actually light. They pushed the timetable up to launch in July. And
I've got a slide here. Yeah.
Okay, great. So if you look at my tweet on this, here, I just pasted it into chat.
Okay.
So you put that up on screen. Central bank digital. Yeah, good.
All right. There you go.
Yeah. So this essentially makes the point that people say, "Oh, Fed now it's not a CBDC," but that doesn't mean you don't have concerns over it. Technically, it's different than a CBDC, so it's important the difference from a technical standpoint. From a civil liberty standpoint, the difference isn't that important. The reason is if you scroll down and look at the screenshots at the end of this post, so click that first one. So first point is that everything gets centralized through the Fed. Okay, number one. If you hit right arrow, yeah, give a second, yeah. That's highlighted there. It says complies with applicable controls. They just slid that one in there, right? Step 3 is complies with applicable controls. Guess what? That's anything. That can literally mean you can't spend too much money. You have to spend money right now. You can't send it to this person with this immigration status, blah, blah, blah. Every kind of possible crazy control that the current system is not, it's somewhat set up to do that, but there's a difference if it's all centralized and it's all in the database. You can have crazy fine-grained controls. Then go to the third slide. So, they're like all the great payment types. And again, in a high-trust society, this sounds great. But you know what I see when I see consumer to government and government to consumer? I see consumer to government drain your account and government to consumer stimulus, right? Like basically helicopter dollars and, freeze and drain your account, to the government, right? Among other things. And so that is like what a CBDC or FedNow actually is. And
but it's worth differentiating between those, right? Because the CBDC is an actual, coin or currency that the Fed is holding. That it's like you're holding your money with the Fed instead of at a bank account. Whereas the Fed now is kind of like a instant payment system. Are you saying there's no meaningful difference in terms of the kind of control that can be exerted through the two systems?
There are some differences, like, it might be a little bit harder to track every single dollar with FedNow than it is with the CBDC. Okay. But there's some things like in terms of transparency and stuff like that are different. But let's say, the FedNow is like the federal PayPal and a CBDC would be like a federal Ethereum. Okay. Roughly speaking. Okay. Go ahead, Lawrence. Did you disagree with that?
Yeah, I think there is an important difference between CBDC, which I am also very alarmed about the prospect of, and FedNow, which I'm not so alarmed about, because FedNow, you keep your account at a private commercial bank. And like you say, the data then is more distributed. Whereas with a CBDC, there is one database where the Fed can in real time watch every transaction. So that's scary. But FedNow is not that. It's just a way of making checks clear faster, basically. So, I share your concern about CBDC, but I don't think FedNow is the thing to be alarmed about.
You're muted.
The difference is that a CBDC, you have an account on the books of the Fed. It's not a coin. People have sometimes described it that way, but it's not a coin. It's the Fed account. Everybody can have an account on the books of the Fed, and then they can track what happens with your account. Whereas FedNow is speeding up transfers between private bank accounts.
Yes, except, so I agree with you that a CBDC would have even greater and more granular levels of control. But if you look at some of the documentation that I was just pasting in, it does appear, and I was looking at some of the API stuff. I may be wrong about this, but you can go and look at the docs, that they can impose applicable controls, that they can, or they're adding the ability to do consumer government payments to your account. It does look like something where, unfortunately, I have to think adversarially with respect to this government, right? And for example, you saw what they did to the truckers. You saw what they did to,
in Canada,
yeah. Even with respect to Russia, you might actually argue it was more justified. Like the Canadian truckers, I think, much less justifiable. It's like a peaceful domestic protest. Russia, they actually did, active war, and so fine, I can understand that, right? Nevertheless, the revelation of that level of financial weapons out there, right? Clearly, even before, a CBDC, let alone, Fed now, before Fed, let alone CBDC, they're freezing accounts, they're doing this type of stuff. And so, of course, it's going to be used for political purposes, is my view. The alternative to that is actually that many of these states, I think, so just taking a few of the points, so coming all the way back up, if you take the observation that, for example, DeSantis has come out against CBDC, he's also got a Florida state guard, he's making, make America states again, right? Federalism is on the rise, and for the last 10 years or so, states have been breaking away from the feds, both left and right, on not just sanctuary cities, of course, but on gun laws, drug laws, abortion laws, crypto, everything, right? In crypto in particular, you have, for example, Texas says the right to buy, sell, send, receive Bitcoin shall not be infringed. Wyoming and Tennessee have the DAO laws. Mississippi and Montana have Bitcoin mining protection acts. The Florida mayor accepts a salary in Bitcoin. Colorado accepts taxes in Bitcoin. New Hampshire is friendly to cryptocurrency. Okay. So what I anticipate is that this is going to become a major political issue, but not in the typical left-right way, more of a federal versus states issue, with more and more states potentially doing something like the opening gold window. Okay, so you want a sci-fi scenario?
Yeah.
All right. Okay. Here's a sci-fi scenario. Okay. Maybe actually over the next few months, okay, we get something. And I'm writing up actually. Here's a preview of an article I'm writing. Okay, reopening the gold window, except it's the digital gold window. So we have bitcoin.florida.gov, bitcoin.texas.gov, bitcoin.wyoming.gov. Okay, and so on. And what you can do is it's a simple Bitcoin exchange where you can buy and sell Bitcoin either as a brokerage or just by placing limit orders. And then these order books, they can use, commercial exchanges, or they can peer with each other. Okay. And the state takes a cut of this, and they are able to start building up their digital gold reserves like El Salvador. Okay. And they have restored the interconvertibility into digital gold that essentially reverses what Nixon did in 1971. Okay. And why did they do this? Well, DeSantis actually put out some stuff on how he might actually have state chartered banks banking crypto as a response to the Fed trying to shut off banking access to crypto. At which point, if you game it out, essentially he'd be daring the Fed to shut off FedWire or ACH or other access to state chartered banks, which would mean like cutting off Florida simply to cut off crypto, which is probably too big a thing. And if the Fed did it, it would actually show the financial totalitarianism that he's saying is potentially there with the CBDC. If they didn't do it, well, then they have to actually allow the currency of the people, by the people, for the people to not perish from this earth. Right? We actually have a Bitcoin exchange that is now at a government level, right? And so the thing is, you're seeing the movie Pacific Rim.
Sure.
Yes.
Yeah. So Pacific Rim, it's like these giant monsters come out of the ocean. And humans cannot fight those giant monsters, so you have to build giant robots. Okay, right. So when you've got when you've got a government that is attacking companies, you can't beat a government with a company. You can only beat it with another government. Okay, so Florida or Texas has enough hit points to be a giant robot that can stand up to harassment from the federal government, and I think that's what's going to come. Right. And so that's one piece of it, how you actually have the rails to buy Bitcoin open over the medium to long run. That's how I think we get state resistance. It's the opposite of kind of how we normally thought about it. It's similar to the El Salvador model where the state has flipped to being pro-Bitcoin, right? Showing, by the way, where you have a political movement and it goes from people thinking it's going to be banned to it becoming a national currency, that's a really, really important thing. Okay, that's like early Christianity going from being banned to something that Constantine adopted, right? That's like, many really important political movements. I can name some of them, but you can think of others, right?
Yeah.
And it goes all the way from ban to essentially the head of state adopting it, right? That's a lot of momentum there. So one aspect of what you mentioned, Lawrence, earlier is the rails. How do you keep the rails open? I think that's what's going to happen. You're going to have states defect and effectively realize how profitable it is for them at the state and local level especially when regional banks are getting killed. This is a way of being a renaissance regional banks, having crypto banks. One. Number two is you said, okay, how do you, what about the transactions per second and so on and so forth. And what I think actually happens is, again, a sci-fi scenario. Let me put it like that. In a sci-fi scenario, on the other side of the kind of conflicts that I think might come, you essentially have Bitcoin atheist states, Bitcoin monotheist states, and Bitcoin polytheist states. Okay, so Bitcoin atheist states would be like the dollar states or the renminbi, okay, renminbi zones, where they hate Bitcoin and you cannot have it in private hands. Like gun control, right? You can't have guns in private hands. Bitcoin, you couldn't have it in private hands. Only the government can have it. It's like FDR's gold seizure, but on steroids. You can't have digital gold in private hands. That'd be in the Bitcoin atheist states. Bitcoin monotheist states, like Bitcoin maximalist states, you can have Bitcoin in private hands. In fact, that defines the state. We could have only Bitcoin. And so all of the inefficiencies, you have to use Lightning Network and other things. You can kind of make that stuff work. It's like there's various workarounds, okay? But basically what is haram, what is prohibited, is to have any token, any digital token other than Bitcoin. Okay? You cannot have anything other than Bitcoin. That's like a Bitcoin monotheist state, like a maximalist state. And then finally, I think you'll also have Bitcoin polytheist states, which have Bitcoin as like Zeus at the center of a bunch of gods, so to speak, right? And Bitcoin polytheist states would have Bitcoin, they have Ethereum, they have other kinds of things, and they would support more complicated financial transactions. They support high capacity blockchains and so on and so forth. And that you'll probably see in like financial centers like UAE or what have you. Okay. So that's kind of how I see the future evolving. And, so, I know that sounds sci-fi, but Lawrence, love your thoughts.
Yeah, I favor separation of church and state, and I favor separation of Bitcoin and state and all other cryptocurrencies and state. So I'm not keen on state governments running exchanges. Those should be in private hands. They should play hands off toward private exchanges and let them do their thing. And so, of course, should the federal government. So, I mean, that's what I think we have to rely on to preserve our monetary freedom of choice. We have to be eternally vigilant against encroachment of our rights and our liberties by the federal government and by the state governments.
Yeah, I do actually understand that view. But that's also why I wouldn't call myself an orthodox libertarian at all. Lee Kuan Yew was pretty much all over the political map and did what he thought was best for the country at any one time. Like, whether it was subsidizing houses or doing things that seemed to be for the left or the libertarian right or what have you. He did some combination of policies, idiosyncratic, heterodox combination of policies. And I don't think that you can beat government harassment with just lawsuits. I think basically you need another state to kind of be on the other side of that. And I think that's what's going to happen. So look at it as unilateral disarmament. If one is not actually taking what Bitcoin really means seriously, it means essentially the currency of a free people, that you're not monitored. You can't have your savings, stolen and frozen, right? But that has an interaction. Go ahead.
And that's why I'm not a fan of what's happened in El Salvador, where the government has tried to mandate that businesses accept Bitcoin whether they want to or not. Fortunately, it hasn't taken. The businesses have refused it, and it's been unenforceable.
I completely understand where you're coming from. In fact, there is a difference of opinion in the community on this.
Sure.
But ultimately, there's actually a higher sort of standard, which is El Salvador going to attract migrants on net, right? That is, say, if there is a seeming violation of one or the other libertarian principle, but they preserve the freedom to exit, and other people are able to exit there, and if they're choosing that jurisdiction over others, whatever local trade-offs they make that may be, incorrect by one theory or another, are nevertheless something that on balance attracts people, right? And I think there's actually multiple solutions to that. That is to say, for example, the Netherlands has a very liberal drug policy. Singapore has a very strict drug policy. But arguably they're both better than the US has this bizarre, bipolar, catch and release type policy where it's simultaneously very harsh punishments and non-punishments, you know. So where Singapore and the Netherlands are very clear about their goals. So I think, you know, whether El Salvador works is defined by whether it attracts citizens, and now he's actually out there recruiting. I think he is attracting citizens. So we will see if that actually ends up working, despite it not working from a theoretical standpoint. It works in practice, not in theory.
I would be pretty surprised to see an autocratic state attracting citizens.
I wouldn't, and the reason is UAE is doing it. You know, like the thing is, when you say autocracy, also now this gets really fundamental kinds of principles, right?
I mean, a guy who brought the army into the Congress to stand by while they voted.
Sure. No, I understand. The thing is that basically, like Lincoln suspended habeas corpus, right? FDR ordered gold seizures. FDR ordered the Japanese internment.
Bad things.
I know, right? But here's the thing: is that you know, if you want to get into all the details of this, and this will be a very long conversation. I think perhaps a cynical view is that no matter how many sanctions, how many invasions, how many coups, how much inflation, how many violations of rights the U.S. establishment does, how many Guantanamos, how many drone strikes, all of that stuff, whatever it does is defined as democracy. But if somebody wins an election they don't like, that is not democracy. That's a threat to democracy, right? Whether it's to the left or to the right. Okay. And I think that's, you know, I think we're getting to the point where, you know, for example, did the Iraqis get a vote? 20 million people were disenfranchised for, like, you know, 20 years, right? Is that a small thing or is that a big thing? That's a big thing, in my view. And can you call yourself a democracy if you're just disenfranchising people like that willy-nilly? You know, who's the authoritarian is what I'm saying, right? And of course, people say, oh, no, you're just doing whataboutism. NSA surveillance, can you opt out of that? The Fed, did we ever vote for the Fed chair? All these people around the world who are basically paying for the dollar to subsidize it via inflation. Do we have a vote for that? We never did any vote for that. They didn't vote for that. The Arab Spring was in part caused by the exporting of inflation abroad, and food prices really jacked up, right? So, you know, when I say this, you know, like I think insofar as one wants to assert a moral high ground, I'm not so sure it's actually there. And, you know, if you're bristling with military bases around the world, and there's a lot of coercion of both soft and hard kinds, whether it's sanctions or actually outright invasions, whether it is surveillance, which is hidden, or whether it is, you know, like, you know, like various treaty blockades or not. Is it something where everybody really has a say around the world and they can do whatever they want freely, or is who's the authoritarian, right? Who's actually imposing their will on the rest of the world, right? So that's why, like, you know, a small country that is choosing to diverge from where the U.S. is, you know, unless one is an anarchist, you know, a minarchist does believe that there is some necessary night watchman state. You do believe that there's some minimal role for force, some minimal role, you know, for, you know, jails and things like this. You know, certainly not a lot, but enough to maintain order. And if that state diverges from the U.S., is it necessarily, quote, authoritarian, or is it just divergent from the U.S. and therefore it is being labeled authoritarian? I think it's a very fundamental question.
I mean, I think the answer would be, you know, beyond the democracy question, you know, is there a fundamental respect for, you know, individual rights, which we don't see in some of the countries that you mentioned, in terms of just allowing people to practice different religions, dress different ways, just, you know, free speech, dissident speech against the government. So I think there is still a meaningful difference between the U.S. and most of the countries that you outlined.
Let's take the last one, right? So meaningful speech against the government.
Yes.
We just saw this Restrict Act proposed, right? Which basically, you know, you've seen this entire the new tablet series on disinformation.
No, I haven't seen this.
So this just came out, but essentially, we are seeing, you know, some of the stuff that Elon, you know, put out there and whatnot. you're seeing that intelligence agencies were suppressing domestic speech in the name of, stopping, quote, disinformation. What I'm trying to say is basically like, there was a time when the U.S. was essentially, the U.S. establishment won a game of free speech and free markets, and therefore is in favor of them. And more recently, you've seen that people on the left have come out against free speech, though they're previously champions of it. People on the right increasingly have come out against free markets that were previously champions of it, because the U.S. establishment is not always winning a game of free speech and free markets. So you're seeing many more bans on speech. You're seeing many more bans on trade. I think we can all agree those have been escalating. And yet at the same time that the authoritarianism has been escalating, the surveillance has been increasing, so too have been the claims of being so democratic. That's a point I'm trying to make, is, as the authoritarianism is escalating within the US, with people being deplatformed, with bills like this proposed completely unironically to strip people of freedoms, then at the same time, the cries of "we're so democratic" are rising, right? That to me is something that should be examined critically. But let me, pause there.
And why is it that Bitcoin is the hedge against so much of that? Because, we've seen, speaking of authoritarian actions, we've seen the U.S. government shut down, make it illegal to hold gold. We've seen that there's a sustained campaign to kind of just systematically shut down cryptocurrency exchanges. I pretty much buy into the Operation Choke Point 2.0 thesis. We had Nick Carter on here talking about that a few weeks ago. Why is it that you think Bitcoin is particularly resistant against this creeping, if not already here, authoritarianism?
I wrote a couple of articles on this, but one thing I want to say is I'm not a utopian. I'm a pragmatist. And, the greatest freedom, you've heard something like ordo-liberal, right? Like the greatest freedom that's possible that is consistent with still a functioning society, right? There's always tension between the rights of the individual and the rights of society and so on. Like you can go to extremes in either direction. With that said, in the current status quo, Bitcoin is a very powerful tool to protect against abuses of both the dollar and the renminbi, for essentially American dissidents and Chinese dissidents, if you want to put it that way, right? Because it can't be frozen, it can't be inflated, it can't be seized. You can also, by the way, use the private keys with something like Nostr to get you free speech, right? Yes. And fundamentally, I think, orange coin is new blue jeans, right? At the end of the Soviet Union, the blue jeans were the symbol of freedom and prosperity. That's what Bitcoin is. It's a global symbol of freedom and prosperity. You're a free person if you can have Bitcoin and you can move it around, because the state ultimately is limited in its rights over you as an individual. And I grant that there are different hybrids here. I grant that El Salvador may not be to everybody's liking, and I'm not living there or what have you. I actually do think on balance, he's probably improved the lives of the people there, but I grant that people may not like the particular formula that he's used. With that said, I think that if you believe in free speech and you believe in free markets, privacy, rule of law, provable fairness, economic stability, transparency, Bitcoin is those things, and the Fed is not, right? Yeah. And more generally, I think the U.S. was, I've got two articles here. One is called Bitcoin as Civilization in Barry Weiss's The Free Press, and the second is Great Protocol Politics and Foreign Policy. And those kind of express the domestic and international case respectively. But just to briefly talk about the international case, for many, many years, the U.S. was the champion of the so-called rules-based order. I'm sure you've heard that term, right? And it set up a system of rules for trade between countries and standards and so on. And now, essentially, both the Trump and Biden administrations have taken a wrecking ball to that, because the U.S. no longer wins in the rules that itself set up. Okay. Now you might say, well, of course, if we're not winning, then screw the game. Okay, right? Because China's bad. Okay, fine. But most of the world is neither American nor Chinese. 4% of the world is American, 20% is Chinese. The 75% that's just watching the rule-based order smashed to smithereens in order to get China. And they're like, okay, well, I liked this old rules-based order, but America doesn't like it anymore. And I definitely do not want to live in the greater East Asia co-prosperity sphere 2.0, which is what China would set up. So what's my option, right? And I think the option in the fullness of time is going to be, what I call great protocol politics, which is Bitcoin, its smart contracts, Ethereum, and so on and so forth for trade between countries. Sort of like the law of the sea is a demilitarized zone, between countries. Obviously, there's ships crash into each other and so on and so forth, but there's like an established standard for kind of the law of the sea. So the law of the chain is just like the law of the sea governs the sea, the law of the chain governs the cloud. And that's how states transact in this sort of neutral zone between themselves as cloud commerce becomes a bigger deal. It's like a neutral zone, as opposed to just being under the Chinese sort of boot, for example, or, the more chaotic and, the quote rules-based order that's becoming the chaos-based order. So that's kind of, you asked, how do I think about this? That's how the protocols in their neutrality, again, it's not perfect, but it is closer to the vision of universal rights without discrimination against any citizen of the internet, right, that we wanted. And free speech and free markets is not everything. It's not physical safety and whatnot, but it's a lot. It's a good chunk of things, right? That's an abbreviated version. The longer versions are in those articles.
I'm going to wrap up with a couple final questions for both of you, because I know it's very late over there in Singapore. It's been a lot of doomer type talk throughout this stream. You both seem to agree that the banking system is in big trouble, that you disagree on the prospect of hyperinflation. I want to bring in a different take real quick, just to have you both react, because it's from someone who I think all of us on the stream respect, Tyler Cowen, GMU economist, says this banking crisis won't wreck the economy. The various bailouts we've been engaging in are not costless. They might introduce more moral hazard the next time around, but it doesn't mean we should expect a spectacular financial crash right now. More likely, we'll see increases in deposit insurance premiums and higher capital requirements for financial institutions. And the rational expectation is that the U.S. will muddle through the current problems and patch up the present at the expense of the future. For better or worse, this is how we deal with most of our crises. What do you think of that more just, it's all going to kind of work out in a, messy but not catastrophic way type of take? Lawrence first.
Well, I have a fair amount of sympathy for that. It might be a little optimistic in that we don't want to understate the insolvency of the banking system. And so the cost to taxpayers may be higher than Tyler is allowing for. But as far as it not needing to create a huge financial crisis, much less hyper expansionary monetary policy, I think he's right about that.
And what about you, Balaji? Does that ease your nerves at all to, consider that less catastrophic scenario?
I think that, obviously it'd be good if that was the case. I think that the situation today is just very different than 2008 because there are scale competitors to USD. I think the background inflation rate is very high. I think this is a consumer crisis. In 2008, basically, it was just guys in skyscrapers trading pieces of paper with markdowns.
Yeah.
With some, like, I think there's WAMU and whatnot, and depositors had some issues there. But for the most part, I don't recall it being.
Here's the long view of kind of the macro situation. We brought this up when we were talking with Arnold Kling and Lynn Alden. So the blue line at the top shows the federal debt to GDP ratio, and that's the line that looks totally kind of ahistorical. Like there's no precedent for that. We're at new levels of debt to GDP. The red line, interest rates, you see post 2020, obviously spiking up. The green line, inflation, also spiking up. Given this situation, how do you think it all shakes out, Larry? Because I mean, we haven't really talked about the role that debt to GDP and just deficit spending in general plays in all this.
Well, so the debt problem really is a problem, and it's hard to find examples of countries that have been that indebted, especially not even as a result of exiting a big war, but have taken on that much debt just in normal times, who have gotten out of it without inflating it away. So the higher the debt goes, the higher the probability that we're going to see a return to double-digit inflation in the U.S. And so that will derange the economy the way it did in the 70s and 80s. So that's not a welcome prospect.
Let me ask for a kind of a final question for Balaji here. So much of what we're talking about here is the collapse of trust in a lot of American institutions, global institutions. It's been broken, it's been going down for years, if not decades. These past few years, it's taken a huge hit. How do you reckon is actually the best way on the individual level to operate in the increasingly trustless world that we find ourselves in?
Well, so first of all, I want to say I'm not a doomer. There's actually a good term called doomer optimist, right? Where basically like, you might think that the old system is crashing, but for example, I have a book called The Network State on what like that new system might look like. On how you can start new countries in the event that the old system is actually, falling away. I do think, if you want my mental model, I think it's like the time before World War I, where you had all the kings and that world seemed eternal, the monarchs and so on. But underneath, there was the churning of technology and the Industrial Revolution and various movements, and then that all just burst forth after, during World War I. And I think in the same way, we have this digital thing that's building, and we have these old institutions that seem eternal. And I think the strain tensions are going to be sort of revealed with this crisis, but we'll see what happens. And what we want is a vision for what's on the other side. I think we want something that protects civil liberties and that protects free markets and that reflects the best of American values. And I do think that's possible. But I think we have to actually have a model in our heads of what happens if I love Tyler. I think he's amazing. What happens if Tyler is not actually right? This is actually a big crisis. What if it's something like what Dollar talked about, where it's actually the inflationary deleveraging, where they're printing the money? Now, actually, I digress because Zach, you asked a different question. So why don't you ask your question again? And I'll ask.
Yeah, I would just like to hear your advice for you're laying out. You're a doomer optimist. You're laying out a very alarming scenario. What do you suggest on the individual level, how people think about kind of recalibrating what they're doing, both, financially, but also just personally, politically, on every level? Like, what is the proper reaction to this news?
Okay, so preface with not financial advice, right?
Yeah.
So let's say that I think, option one is you can just do nothing and say nothing's going to happen. State's going to take care of it. Option two, people can wire their money to big banks or money market funds. I think that's probably might be better than leaving your money, just intact somewhere. But okay. Option three is you hedge to some extent into Bitcoin. Option four is you get to a Bitcoin-friendly jurisdiction, whether inside the U.S. like Florida or Texas, or outside the U.S., El Salvador, or UAE, or like one of many of them. I think number five is, certainly at the same time this is happening, markets, are seizing up in different ways, bank crisis happening. You have the rise of AI. You also have this third movie that's playing where China is doing all these deals. And I'd say, I kind of think in some ways this is the prelude to the camera moving to Asia, AI, and crypto. And so like the more leveraged you can be on that, that's probably better, right? So certainly learning AI tools, being physically in Asia, and understanding why crypto, by the way. The other thing is commodities. Because of the rise of AI, everything digital becomes cheap. So community, cryptography, commodities are the things that are hard on their side because the AI can't create people, it can't fake digital signatures, and it can't, fake natural resources. So that's a compliment. That's the type of stuff that's still there on the other side of this disruption. And that's what I think one should probably do. And of course, that ranges all from do nothing to like totally reinvent your life on this side. And you can pick whatever you think is good on that continuum. Or you can ignore me, which is totally fine, and that's totally your prerogative. Just then buy treasuries. So.
So similar question for you, Larry, because you just published a book about the history of money, and
future.
are the history and future of money, and you make the case that switching to a fiat standard is responsible for a lot of the problems that we're facing today.
Right.
And you also lay out, as you said, some possible paths forward. You have a different outlook from Balaji. You don't think we're on the brink of hyperbitcoinization, but you recognize that there are some looming dangers ahead. So what would you recommend is a sustainable, viable path forward to secure kind of the economic and monetary stability of the United States?
Yeah, so Bitcoin is great at what it does, which is provide a censorship-resistant method of payment. It's censorship-resistant because it doesn't go through central banks. When you send somebody Bitcoin, that transaction's not being cleared through a central bank, which can whitelist and blacklist who it likes and doesn't like. But it isn't well designed for the role of a commonly accepted medium of exchange. That is, for paying your rent or buying your coffee, because its purchasing power is just too volatile. And the volatility isn't because it's young. It hasn't diminished with age. It hasn't diminished when the market cap has been higher. It's built into Bitcoin because the release schedule is pre-programmed and fixed. So the supply of Bitcoin, the quantity of coins in circulation, doesn't respond to a run-up in the purchasing power, even in the long run. And so it doesn't stabilize the value of Bitcoin. Unlike the classical gold standard, where the supply of gold does respond in the long run to an increase in the purchasing power of gold, because it pays miners to dig a little deeper when the purchasing power is high, and that brings the purchasing power back down. So if I had my druthers, I think the way to depoliticize money and have a money of stable purchasing power is to resurrect in some modern form a commodity standard, a gold standard. We've got lots of gold. It's still sitting there in central bank vaults. We could make use of it. Is that politically likely? No, unless we have a really terrible crisis, which is not something I want to hope for. But personally, I advise people to diversify their investments. If you have more than $250,000 in a U.S. bank, get it out of there. Get the excess out of there into something safer. If you have all your money in long-term bonds, you diversify away from there. So follow the advice of Wu-Tang Financial and diversify your bonds. I think inflation is more of a threat than the market currently does. So I think inflation indexed bonds are underpriced, and that's a way to hedge against inflation. Although you do have to worry about whether the Treasury will make good on its promise to compensate you for inflation. They've done okay with that so far. And so that's my personal financial advice. Warning, I'm not a licensed investment advisor.
And what about the role of actual competition in money? Is there a way to improve that, and can that help
so more
figure out
good.
what is actually the soundest?
Yeah, so people should be free to exit from the dollar into whatever they think is a better currency, whether it's euros, Swiss francs, gold, or Bitcoin. And that provides a little bit of discipline on central banks. Not many people are going to do that as long as inflation rates are moderate, and that's okay because it's not that important as long as inflation is moderate. But as inflation rises, it becomes increasingly important to have those exit options. So it's important not to let the authorities cut those off to close the exits. So I'm as concerned about that as Balaji is.
Okay. Thank you, Larry. Thank you, Balaji. We'll be watching the bet, and thank you for starting this conversation with it. I think that there's a lot of important underlying issues that you've laid out here today that are important to draw people's attention to. So, in that sense, your bet, I think, has accomplished something. And thank you also to all the viewers who tuned in today. We'll be back next week, same time on Thursday, and we'll see you then. Thanks.
Thanks.